Hello guys, this is a pre-market analysis of 30th of April. So we will have to discuss about the Fed decision. There is a policy uncertainty and then US-Iran escalation. That's again back to square one. That's something which we need to discuss. And oil is touching 120, which is a major risk. The spot price of crude oil, if you see, that's 120. So all these we need to discuss in this session. So let's start with the interest rate decision. So the interest rate have kept unchanged between like 3.5% to 3.75. So it's the third consecutive pause, and it's not a surprise also. We were expecting the same, and I've discussed also the same thing. But the big concern is there is an internal division among the members, and four members actually oppose the majority, and this is the highest since 1992. And if I want to discuss more details about the division, that's not absolutely necessary for us to trade, but still, just for knowledge purpose. See, one member wanted 25 basis point rate cut, and three members agreed to pause because but they don't want to, explain the reason and further reducing or easing possibilities also. So easing bias is not mentioned, and some actually wanted, a rate increase also. So the macro environment for some of them is very confusing, and the reason which has been highlighted is high inflation. So inflation is still high, and that is mainly because of the war. The oil price is increasing, so inflation is rising, and potentially, if this continue for quite some time, there will be more in future also. Inflation will be there, so there is a requirement of rate increase possible in future, right? So the window is open. It can be a rate cut, it can be a rate increase. If there is an inflation which is coming down or the growth is slowing down, you will cut the rate. If there is a increase in prices, inflation, then the rate increase will also be there. So as of now, inflation is high, and that's mainly because of war. That's mainly because of the oil price. So maybe for some more time, it is expected also. And labor market is also slowing down. So these are the problem, right? So the decision is, of course, Fed cannot cut the interest rate aggressively at this point of time when inflation is not at a comfortable level. And there is another concern also that is related to the political independence. And we have already discussed. See, you compare it with RBI. RBI's operations, can the government interfere? No, that's the kind of autonomy, that's the kind of independence which is required. But we have seen Fed chairman has been asked by White House or Mr. Trump to reduce the interest rate or cut the interest rate. But that's not something that's actually affecting the autonomy or independence. Even earlier also, earlier in India also, there were situations that when RBI continuously increasing the interest rates. That's during Raghuram Ranjan time. I still remember 2012, 2013 time, interest rates were continuously increasing. Inflation was high. So the government always wanted what? Reduce the interest rate, growth will be promoted, demand should be there. So the government want to increase the growth, so reduce the interest rate. But RBI's priority is inflation. Same is the case there also. So RBI keep on increasing the interest rate. So RBI and government came in tussle, and there were arguments and all at that point of time. So here now again this question is there, question of independence, question of autonomy is there. So in fact, the Fed has to operate independently of White House. Like RBI in India is operating independently of the government or parliament. So there is a division inside the Fed, which you can see. Some members are getting influenced, and the market reaction, of course, is negative because uncertainty is actually increasing. And if you look at Fed chairman's press conference, so the key statement is interest rates, is in a position to move either direction. Just before I have mentioned, if the inflation persists, if inflation rise because of this war, then they have to go for a hike. At the same time, if the economy slows down, then there is no, no such possibility of hike. You have to cut also. So the cut is also possible if inflation remains stable and in case economy slows. If economy slows, then what is the priority? You have to boost the demand. So you have to reduce the interest rate and you have to promote the growth. So either side it is actually positioned. So, all options are open now. And this was the last FOMC meeting for the current chairman. So this is a high profile role. So after this, he will be just as a governor. So that is also one important. So the final takeaway from this is there is no rate change, and policy uncertainty have increased. It can go either side. The opposition also have increased during this time. So otherwise, it's nothing more than what we expected and what we discussed. Now coming to US-Iran conflict. So major update is Trump have rejected the Iran's proposal completely, and the new strategy is they'll continue the prolonged naval blockade. And the statement issued, it is very clear that blockade is more effective than bombing. So they have done enough bombing, they have attacked, and you got criticisms from all corners of the world also. So the blockade is much better than bombing. It is cost effective also now, according to Trump. So the condition will continue until Iran will accept the US nuclear deal. But what Iran wants is first you lift the naval blockade, then we'll open the Strait of Hormuz, let the energy crisis solve first, and then comes the nuclear deal. So that is completely rejected. And Iran's response is also a very strong warning. They said US blockade will be met with unprecedented military action, and also Iran have made it very clear that our patients also have limits. So the conclusion is the tone. Now you can see from both sides it is very aggressive. So the final status is like that situation is back to the deadlock. Strait of Hormuz is still closed. Naval blockade is still there, and the nuclear deal is nothing happening. And the oil, again, another one which we need to discuss is Brent crude jumped almost 7% and went to 120 per barrel. This is highest since June 2022. So the price is extremely high. It is very negative. So all these will be, guiding our market. So be very careful. It's a Sensex expiry. Now you cannot immediately take a put trade also. Yesterday also it was negative, but at one point it just went up, 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 and then towards the end it came down. Bank Nifty, it was negative from the opening, but somehow Nifty was going up. So Bank Nifty also went up, but then again they came down and closed at yesterday's low. So today, the negative factors, if you see the Fed division is one thing, and oil spike is very important. This geopolitical escalation, this is again very important. These three are very negative. But some of the earnings, Visa, Seagate, and strong results, that's some positive, but the negatives are actually more. So Dow Jones have closed 0.6% negative, S&P flat but with negative bias, Nasdaq also flat with slight positive bias, and VIX have increased 5% and now it's at 19. So the fear is rising. That's because of geopolitical escalation. And Gift Nifty showing a gap down signal. So it's at 24,110 now. Yeah, 24, 110. So that means you'll be getting some 100-point gap down opening, right? So situation is very clearly weak. 100, 150-point gap down you'll be getting. If you look at Indian ADRs, again mixed to negative. HDFC is in line with the Indian market, and ICICI is also slightly more negative, and that is basically indicating the fresh negative or the weakness in the banks. We discussed about this banking reason yesterday, RBI's new role also. And Infosys, if you see, it's positive in US and India, both ADRs are positive. So in fact, ADR gain, if you look at it, it's lower than India, but still both are positive, which is a positive sign. Wipro is more negative. So IT bank, if you take IT is like neutral, we can say. Banks have a negative bias. So if you're someone who's trading Bank Nifty, look for a short opportunity when you get a bounce. Okay. Now, if you look at institutional data, again, FII sold for 2,500 crore, DII is bought for 2,300 crore, and you can see in 2023, FII is bought for almost 20 billion. Now 2025, in just 4 or 5 months, they sold for 20 billion, right? In 2025 also, they sold for 19 billion. 2025, 2024, no major activity despite election and all. They were just holding. So that might be profit booking, but here they are selling extra. So much of selling. And this is the highest selling which you can see. And, already they have sold 20 billion in 2025. Now, in just a matter of 4 or 5 months itself, they sold like what they have sold in 2025. So very strong negative signal. And if you look at the open interest, futures OI is 4% positive. Options calls are 18%, puts are 24.4%. That's because of yesterday's up move, but that will change. So PCR for now is 0.98, which has increased to 1.03, which is slightly bullish bias, but that will change today. Okay, participant positioning also, if you see, the retailers 23.6% bullish, FIIs are bearish, prop traders are bearish, FIIs 18%, prop traders are 4% in options. And futures, if you see, retailers 72% long, prop traders 57 long. So these two are long, and the FIIs are 87.4, which is heavily on short side. So smart money is still bearish. Apart from that, some events are there to look after today. Now, if you look at the technicals, yesterday, it's a 100-point gap up as we discussed, and they made a high of 24,330, and there was a big selling towards the end, came to 24,180. And it's a bullish candle, but you can see upper shadow, which means at a higher level selling is coming 24,300. And so weakness is there today. It's more weak also. RSI is just above 50, so it's like neutral, we can say. Important level is 24,330. Yesterday's high is very important, and 24,500 is the major resistance. If they sustain that 24,330 above, then 24,500, 600 is possible. Support immediately at 24,000, then 23,900, that range. And if that is breaking down, major support is at 23,800. So 23,800 to 24,500 range is what we are actually looking for. Okay, Bank Nifty resistance 55,900 to 600, 56,000 level. Support is at 55,000, 54,900. That's 1,000-point range is what we are taking. Again, if you look at the options data, maximum call over is at 25,000, and then after that, 25,000. I don't think that is more conservative. 24,500 that you can consider, that is the upside range also, and then 24,300. That's the straddle people yesterday during that up move. Written might have straddles or directional also. And then put side, if you see 24,000, which could be a good support, and then 24,200, which is a straddle people. To be on a safer side, there are many at 23,800 also. So 24,000 to 24,500, or 23,800 to 24,500 is the best range. 23,800 to 24,300 could also be the range. Okay. So overall, the Fed meeting, there is no change in interest rate, but strong internal division, which is negative. Otherwise, it is a non-event because no change. And this internal division is what it makes negative. Geopolitics, if you see, tensions are escalating again. Oil is at big risk. It's 120, and FIIs are aggressively selling. Whatever they sold in 2025, that itself was high. And that much they have sold already in 2026, in the not even half of 2026 now. It's just 4 months. Okay. So be very careful. And if you would like to learn this, you can get in touch with us. We have the live market mentoring program where we trade live and we teach in the live market. So see you there.